Okay, what we want to do actually is just show you how to do an inventory adjustment. And there's a couple things you have to put together first. And we're talking about income statements here. It's an adjustment on your income statement. We're going to have to go back to the balance sheet, and we're going to need a balance sheet beginning and ending. Okay, so when I start talking about that, we'll have a balance sheet which is was made, that snapshot from December or January 1st, and then we're going to have an ending balance sheet for December 31st. So we follow the whole fiscal year. So the income statement and the reflection of this adjustment will be on an income statement for that fiscal year, January 1 to December 31st. And this is actually, it's in your textbook, but I wanted to go over it so hopefully you can make these kinds of adjustments. The reason you want to do this, and it's again, we want to make these accrual adjustments so that we can accurately reflect the profitability within your income statement. And that's the number one thing, is the bottom line with your income statement, of course, is profitability. So anyway, here's the example that we have here. It doesn't have to be corn, okay? It could be tons of hay. It could be actually livestock bought for resale, those kinds of things which we would put into inventory on your balance sheet, okay? So we wanted to actually show the difference and whether or not that would affect your income statement. So the beginning balance of corn on January 1st is 10,000 bushel, and at that time we could market it for $3 a bushel, okay? So you can do the math really quick. It's worth $30,000, okay? So during the year, we actually sold 10,000 bushel. We, of course, put it in a bin. We may not know which is which, that year's crop or last year's crop, but we sold 10,000 bushel at $3, okay? It could be anything. And then we raised another 25,000 bushel. And we could sell it at $3.25. Okay. During the year too, we also hauled 5,000 bushel to the grain elevator and sold it at the same price at $3.25. So, all right. So, what's our ending balance of corn? I'm going to pause it here, and you tell me. Okay. Okay, we're back. Hopefully you calculated this up. 5,000 bushels times $3.25, $16,250. Okay, we have total corn sales during the year. Okay, these two sales right here of $46,250. So that would show up on your income statement probably if you didn't do this accrual adjustment. Well, not probably, it would, because you show it as a sale and you're going to get the check and deposit it in your account. All right, then the adjustment part of that, we have to take into account in the beginning inventory right here. We have 20,000 bushels at $3.25. In the beginning inventory as of January 1st, we had 10,000 bushel, and that was valued at $3. So what I want you to do is calculate those two numbers up. And you're going to actually take your ending inventory minus your beginning inventory, okay, in order to come up with your adjustment to the corn inventory right here. So go ahead and do that. And then we can figure out what our total corn sales or income is for that period. Okay, here's the answer. And you may have already figured this up. Your ending inventory is 65,000. That's just 20,000 bushels times 3.25 per bushel. And then your 10,000 bushel at $3, and it ends up being 30,000. What we've got is the difference here, 10,000 bushel, and the difference in price that's affecting that inventory number when we convert it into currency or dollars in this case. Okay, so this is the number that we're actually looking for, is this adjustment. And actually, I like to see that as a line item on your income statement. within that rather than combining it here. I like to see this number up on sales and then any of my adjustments to inventory down on the lower part of your revenue or sales portion of your income statement, the upper half, you might call it. But if we're doing everything on an accrual basis for that year, we should show $81,250 worth of income for the corn crop, even though there is some in the bin still. All right? That way we are showing the proper amount of income, and then it will be reflected accurately in the profit or the bottom line of your income statement. So that's how you do your income statement, your adjustments to income, and when you're talking about an inventory item. Okay, so and those would be things that we would have sales. Okay, here we're going to do actually an expense adjustment, or what would be typically thought of as an expense adjustment. And in this case, we're going to talk about fertilizer, but it wouldn't have to be fertilizer. It could be fuel. It could be a whole lot of different things. And here's one thing that I try to emphasize, especially in my in-class classes. Okay, I know I just said that twice, but anyway, is to do this in a practical manner. If you spend about the same amount for these different things like inventory items that we're talking about here, fertilizer, maybe you've got a huge amount of vaccines and things like that that you carry on into the next year, or fuel, or seed, that sort of thing. If it's pretty close to the same every year, I'm not going to worry about it too much. I know it doesn't actually follow generally approved accounting practices. You don't make the accuracy and the adjustments, but a little bit's not going to fool with the amount of accuracy in the bottom line. I don't want you to get sloppy, okay? And I don't want you to get super accurate where that you've got 5 pencils this year and you only have 4 in inventory at the end, and so you got a difference of 1 pencil. So, I mean, make this thing practical. Have some major items that you just kind of take a look at, inventory them, and so you can make some direct reflections on your profit and loss. And make it practical. Make it something that you will do, depending. If you're a detail-oriented person, then you're going to do more. But you're not going to get a whole lot more accuracy by, taking really the small expenditures and having them inventory throughout the year. Okay? So you may agree or disagree with me on that one. That's just the kind of way I am, a little more practical on that end. So this is an accrual adjustment to an expense account for fertilizer. And in a typical, if we had this scenario going on and we were completely a cash basis accounting system, this is how much we spent in this fiscal year, $1,715. It would be that 7 ton of fertilizer at $245. Okay, that's strictly cash. But since we want to be really accurate with our profitability and we want to put that adjustment and have it reflected in our income statement, we're going to take the inventory we had at the beginning of the year, which was 3 ton of fertilizer as of January 1st. That was purchased in the prior year. Okay? We purchased it for $248. We also purchased another 7 ton that year, in the year that we're operating, for $245 a ton. Okay? So we had a cash expenditure of the year of $1,715. Again, that would be what would be reflected on a cash accounting system. But in order to get the true picture of what's going on here on a profit basis, we need to make an adjustment here. So our beginning inventory of 3 ton at $248, I want you to calculate that right here. Just scratch this out on a piece of paper so you get used to doing it. And then the ending inventory of 4 ton from what we have here, we actually applied some fertilizer, doesn't it? That's what that means. So actually we have 10 ton and we have 4 ton, means we applied 6 ton. How's that for simple math? That's not new math, that's old math. Okay? So you can come up with those figures, and then I want you to figure out what the inventory increase or decrease is in that particular item. Okay? The cash value, currency value of it, so that we can post it. Accounting systems don't like it when you post things in different kind of units. They like dollars in our case. Okay? Fertilizer expense that we're actually going to show would be different than this one right here. All right? So go ahead, calculate that up for you. I'll give you a second, or you can hit pause, and then I'll give you the answer. Okay, it's good practice. Okay, now you can see that I've actually come up with the answer for this particular problem, an expense adjustment to our income statement. And we're actually, it comes out, beginning inventory is $744. That's just multiplying 3 ton times 248. And then we take 4 ton times 245. This is the amount that we have at the end of the year, and this is what we bought it for, $245. We subtract that from the beginning inventory value. We get 236, the adjustment. It'd be a minus adjustment. And rather than reporting that we had $1,715 worth of expenses on fertilizer, we're actually going to show in a true profit picture on our income statement that we had $1,479. Okay? Again, I may actually just show this adjustment as a line item on my income statement, so that that way I can kind of figure it out a little bit easier. That's just the way I like to see it. But you could just put this on your true profit income statement with the other adjustments. One last thing that it does mention in the textbook is a non-cash expenditure would be depreciation. We do actually have an expenditure for that, and that's when we go out and buy the tractor, or we buy the breeding livestock, or any of those those items that last more than 1 year that we depreciate. Okay, so but the depreciation is a non-cash expense on the income statement, and we're going to have to add that to this income statement for that fiscal year. Typically, we do that once a year. You may want to do it every once a quarter or every half year, depending on how accurate you want to look at your income statements. But that would be actually a large item, typically for most of us. Pickups and tractors and all kinds of equipment, and land improvements, fencing, all those kinds of things that are depreciating out over time are going to actually decrease, make a drag on the profitability for that company. Okay, so hopefully that helped you on this, and I'll probably have a few problems for you to do. So if you have any questions with it, give me a holler. I always respond to my phone calls, and I respond to emails too. And some of you have already found that out, but I like you to call me, and I get to know you and that sort of thing. And I know that you've got a great story. I love hearing about it. And if you need some help with your books, I've helped a lot of people on this end of things, and putting together a real simplified, practical kind of a bookkeeping system is something that could be in your future, and probably is. So take care. Hopefully this helped explain a little bit about adjustments.